Let's speak with our guest. Ivan Feinseth with us, Senior Partner, Chief Investment Officer, Director of Research at Tigris Financial Partners. Ivan, it's good to see you. And I was reading through some of the analyst reports, and D.A. Davidson was saying, for example, they don't need the distraction of Expedia right now. And others say, hey, this could be a good growth strategy for Uber. What say you?
Well, it would be an interesting combination because at some point, Uber is going to have to diversify away from transportation and delivery services. And also, Expedia and all the travel services providers at some level want to have more and more touch points. And travel demand is strong, and I believe it will continue. And as consumers travel, they're making more sophisticated trips and multi-city vacations, multi-city tours, which involves more than just planes and hotels. It's local transportation as well as tours and activities in local places. So to add these services and intertwine them is, I think, makes it more convenient for the consumer. However, I would say right now the biggest issue, we're only 20 days away from an election that will have a major impact in M&A activity. For me, if they were to announce this deal right now, I think the first thing that Alina Khan would do is put the kibosh on it because she's never seen a merger she didn't hate, no matter what. So chances are, even if the Democrats win, she's probably going to be replaced. But if Trump wins, then she's definitely going to be replaced. And I think that's going to have a major impact in reopening, M&A activity. Then second, it would make sense for then Booking to take a look at Lyft. Lyft is much smaller by a significant amount to Uber, but it would, in the same concept, or theory, complement the services that Booking offers. So the merger makes sense because in the travel service industry, the more services you can provide, the more revenue per consumer or per your customer you're going to get. And more importantly, consumers want a more unified travel platform that just makes it easier to integrate all of the different facets of a trip.
Expedia currently has a market value of $19.6 billion. So this would be the biggest acquisition deal ever for Uber. And the Financial Times reported that it's at a very early stage. You could, theoretically, you tell me, could others step in and say, we also have an interest for Expedia? I mean, would it be as simple as them? I mean, I know that Dara Khosrowshahi has the history at Expedia, so that helps the streamline. But maybe others step in.
Well, the concept makes sense for Uber. It doesn't really make sense for other service providers. A merger between Booking and Expedia, first of all, that would have a difficult antitrust hurdle to overcome. But the airlines are. It's just. I don't really know who else would be a buyer of, in some way, to either vertically or integrate their business. This does instantly diversify Uber's business. And Uber also has a very large customer base that they can bring on board to Expedia as well. So other ideas of who benefit from a merger with, I don't think there's that many, but this is an interesting merger, and it does make sense from both the company and the end customer user, result. The difficulty is going to be probably coming up with a valuation for Expedia and also regulatory approval.
Right. So we will continue to follow that. I saw one valuation of $19.6 billion, but to your point, it makes sense in that Uber's already into travel as it is, and this would expand that. I was trying to think, I'm like, maybe an Amazon that does absolutely everything anyway. That doesn't necessarily go, or, we think of airlines and cruise lines. And by the way, as I mentioned cruise lines, and we're thinking travel, you loved the cruise lines, and some of them are really doing incredibly well. I didn't pull them up most recently, but I know we saw some great moves, and I remember saying to myself, I have to ask Ivan and circle back what he thinks about this group. You called some great calls. Now what?
I think the market is finally waking up to the strength of the cruise business, the strength of the travel business, the strength of the cruise business, the value of a cruise vacation, which still is significant over land and other types of tour vacations. And the cruise industry, it's not slowing down. I mean, everybody has always doubted the demand at some point would end. I mean, the cruise companies, they're booking into 2026. They have more ships coming out. The capacity, they are capacity constrained. There's not an overabundance of capacity. More ships means more cruises. And you even have Disney, as for a long time that I've covered Disney, only recently has Disney started to highlight their cruise business and the fact that they are also adding ships to their cruise fleet. So I think the momentum will continue for the cruise
Okay.
industry and the booking momentum. I mean, and the share prices, I think, have more to go.
More to go. Okay, so do you buy Uber? Do you buy Expedia? And which cruise line do you buy?
I think still the one with the most upside right now is to stack rank them is one Norwegian followed by Carnival. Royal stock has done tremendously well. I think there is further upside in Royal, but maybe the other two now close the gap with Royal. Royal's been the one to beat, and I think that both Norwegian and Carnival will catch up. And then you have a recent IPO of Viking, which is a very unique niche of the river cruises, the more educationally focused, experiential cruises, and that stock has done well, and they are benefiting from strong consumer demand for cruises as well. And then look, I like booking the best as far as the travel service providers, the travel service aggregators. But if we could get a deal for Expedia, it probably has 20 to 30% upside that would bring it close to its all-time high from a couple years ago, in which that would probably be the level of, let's say, 25 plus billion dollars that Uber would have to pay, and also most likely use stock to allow the current Expedia shareholders to participate in what would be the upside of the merger of the two companies.
That's big. That would be big if Expedia were to move 20% plus, 20 to 30%,
That's probably where
possibly,
they
as
would
you
have to
noted. So,
be to
yeah.
make a deal.
All right, Ivan Feinseth, Tigris Financial Partners. Always great to see you. Thanks
You
so
too.
much for
Thank
being
you.
here.